So one of the things about markets is that they're really in DRS your shares. They're really effective tools. They kind of work. I'm not going to say they work on a supernatural level, but I will say that the outputs of markets as machines, they're not neural networks, but they're machines. The outputs of lots of machines are surprising. Neural networks can output natural language. It's incredible. Markets output something that's it's a process or a machine that outputs something really interesting. One of the things that markets seem to sense is weak positions. So at the time of the squeeze, so to speak, at GameStop, there were a lot of hedge funds in trouble shorting the stock, and they basically had to capitulate, or they would suffer sort of either permanent loss or a really large drawdown. And neither are particularly good for the hedge fund, for having a hedge fund business. Your clients don't want to see you have erratic ups and downs. You guys know, many people poke fun at me. I'm having very much right now an erratic loss. But I'm not a hedge fund. I don't have clients. I don't particularly care about my month-to-month performance. I care about how I do at the end. I do care about permanent loss because if I have permanent loss, I don't have any capital to make it back. So I have to adjust my position sizes to kind of roughly allow me to stay in the game without, being crippled. And even being right on the trade, you still don't make any money on it. So I think that one of the things that markets can sense is the pain of each side of the trade, which some people call max pain or max pain theory. Some people even have formulas for calculating what is max pain, but it's not really determinable. You can feel it out if you're a really good trader. Also, if you have your ear to the ground and you're talking to lots of funds, you can feel it out too. You can look at the short interest a little bit and see if there's been capitulation. And sometimes there's pain, but not capitulation. Sometimes there's pain, and it seems like it's going to have a capitulation. So it's really hard to tell. When you whisper, the hedge fund industry is composed of people. We talk, we gossip, and there's a lot of discussion about who's losing money on a trade or who has a big bold trade they're making. Oh, I heard, I don't know, Millennium is short 5 million shares of IonQ. Oh, I heard they're going to fire the guy that did that, and they're going to have to buy 5 million shares of IonQ. There's that kind of idea. So I think that markets can sort of sense these sometimes, but in other ways, markets don't particularly care. In the long run, the process of the market, kind to take a Niccolo de Masi quote, the market weighing machine is a process that runs concurrently with the market max pain machine. So to me, I feel like, again, the rhythm of these trades is really interesting. Some people are really in tune to them, and they really have this gut feel. To me, I like to override my gut feel a lot and just go with the weighing process machine, especially because I don't manage other people's money. I feel like, what do I care? I can be down 10% in a month or more, as long as I feel comfortable what I'm doing isn't crazy. So, it's an interesting kind of way to do things. No, Christopher, I'm talking about increasing positions and being unafraid of mark-to-market losses. Other traders have to flinch and capitulate, but I can afford to flinch last. But even I have to flinch at some point. I haven't really begun to raise more capital for the trade, but I'm confident I could raise quite a lot for adding to this trade. But I could also use other resources I have, which I haven't done quite yet. So I have some breathability if it goes to, if these stocks double again, I could survive it. I am heavily short QUBT, yes. You are never supposed to add to a losing position. But the word never doesn't really apply to investing or trading. There are no rules, there's only heuristics. And I think that this is one of those times where it's like Tilray at 200 and wheat stocks in general. Wheat stocks were like very clearly. I'm certainly talking to people, Johnny. I don't know, like I don't think I'd do anything for less than like 5 million a pop, and I would just get a fee for the trade, manage the trade somehow. But that's basically it. It'd be like a special purpose hedge fund. Probably Kalen, I'm not sure. It's probably much more of a split that's favorable for the investor. Enter a name. So like Bill Ackman has done this before, where he just raised a fund just to buy one stock. So yeah, Garrett. I mean, it certainly. I don't think other hedge funds would be great clients for the trade, but there's family offices and folks like that that trust. They like the idea. They read the pitch. So that sounds really good. How do I get involved? And I think depending on who you are, you can pull it off. Yeah, exactly. Cartel, Kopf. That's right. They don't have to pick sizing, entry, exit, all that stuff. Yeah, Aditya is also right that these kinds of stocks scare a lot of hedge funds, and then if the last few months has basically scared all of them. So if I knew that, of course, VP, I'd go long. That's that's just kind of what you have to live with as a short. I mean, I think you should never leave your North Star for longs or shorts. The day that you start thinking that you're the psychological master of the market, you basically said, my ability to value companies and research them is subordinate to this mysterious psychological phenomenon I think I can intuit. How can you intuit it? How do you know that you're not just throwing a dice? At least with your research methods, you have something of a understanding. Your intuition can be good, but it shouldn't be subordinated. Mach music, you're asking a bunch of kind of ridiculous questions. They're kind of fun to answer, but let me see what your older one was that I ignored. Yes, he said, it's crazy how much risk there is in shorting. The max reward is 100%. I gotta think about that one. That's a good one. No, I don't think so. I don't think so. I think momentum trades just tend to extinguish themselves out, and then you need to see financial improvements at companies. Like if D-Wave has a bad quarter next quarter, then the stock will drop because people will say, well, the CEO said quantum is now. Well, where's the revenue? Yeah, I think that psychology to me is something that's going to just be normally distributed. I don't believe I'm better at market timing than anybody else, even though I have 20 years of trading experience. You know, I think I am better at investing than most other people. I think I can tell what a bullshit company is and what a successful company is. But even then, I think I'm right 60% of the time, not 90% of the time. And this one I feel really confident, but not necessarily mean anything. But on the timing part of it, we get trades that sometimes work like the day we do them. And then we get trades that like this that are thorny and difficult and painful. And like I said, I'd love to just escape with just a small loss, I would be thrilled. I have tons of friends where if you told them you can go back in time and just say, I'm going to lose $1 million on this trade and you're never going to worry about the trade again, we would all do that right away, including me. But, we're in this trade and we're going to work it out. And, it's not going to be a positive experience no matter what. But let me tell you something about investing. There is no investor that only wins. Never heard of that. Not Steve Cohen, not Jim Simons, not Warren Buffett. Simons was close to bankruptcy twice. Steve Cohen had to shut his firm down. There are so many cases where, it's hard to be right all the time. Pretty much nobody is that. Alejandro, we don't take you seriously, dude.